I'd now like to call upon Mr. Pankaj Kumar Rathi, who is a partner and head treasury at Almus Risk Consulting LLP, to please introduce our next speaker.
Good morning, everyone. Thank you, Mr. Mahalingam, for accepting our invitation to speak on topic Reimagining Markets in a Deglobalized World, Challenges and Opportunities. According to me, he is the most equipped person to speak on this topic since he has invested more than 4 decades of his professional career spanning across the financial market regulators, Reserve Bank of India and SEBI. He has also got best mix of FX and debt while in RBI and equities and commodities while in SEBI. He has taken on varied roles in RBI encompassing financial market development, regulations and operations, foreign exchange reserves management, debt management and regulation, and supervision of bank. He was executive director in charge of forex market intervention, as well as management of forex reserves of the country and rupee liquidity, policy and operations. His experience spans across most difficult time of the financial market, such as 2008 Lehman crisis, as well as taper tantrum in 2013 and 16. He was closely involved in giving shape to the foreign exchange policy and monetary policies implementation. In his role as a whole-time board member of SEBI between 2016 and 2021, he carried basically executive responsibilities as well. He has a wide experience of regulating mutual funds, stock exchanges, listed companies, foreign portfolio investors, corporate governance aspects, stocks and derivative markets, corporate bond market, and amongst others. Mr. Mahalingam started his career in the State Bank of India in 1978 after finishing his master's in statistics and operation research from IIT Kanpur. He is also an MBA in international banking and finance from Birmingham Business School in the UK. Welcome, sir. Please come.
Good morning to all of you. Thanks to Almus for this opportunity once again for me to interact with a very enlightened audience here. My special thanks, of course, to the Almus people, Mr. Maulik, Mr. Bijou, and the entire team which has put in a huge amount of hard work here. And as Mr. Padmanabhan said, I think as a mentor for this particular conference year after year, I think the team under Padmanabhan has been able to produce excellent themes for discussion here and for brainstorming here, which has been pretty useful over the policy making arena as far as the 2 regulators are concerned, the financial sector regulators are concerned. I would like to start off by first acknowledging that generally I start my talk with macros. Thankfully, Anand took this job now, so I don't need to talk on the macros at all. So I will straight away plunge into the subject. And Srini gave an excellent account of, what you need to do as mantras for success, whether it is a market or whether it is a real life. 100% correct. My experience in the market is never feel that you are on the top of the market. Never. Because the moment you start feeling that, I think the market gives you such a mighty blow that you come down to earth. That's going to be the theme. Now, the topic which has been given to me, of course, I am going to do 2 roles. I am going to speak on this, and I am going to be a part of the panel discussion also. So I'm not going to throw all the points out here. I have generously borrowed from what Anirudh actually put out as a kind of a subject matter for this particular panel discussion, reimagining markets in a deglobalizing world. Clearly, when we talk about globalization, we tend to restrict ourselves to finance. That's a general weakness that all of us have. Anant really highlighted it very well. We think the whole world is made of finance. We forget about the real economy. In fact, we talk to any engineer today, that guy, he says that I'm in the software, I'm in finance. Nobody says I'm a mechanical engineer, I'm a chemical engineer, and civil engineering of all is a forgotten engineering today. It's a very, very sad state of affairs, absolutely sad state of affairs. Unless the real sector is going to come to the forefront, which I repeat from what Anand says, I think the country has no future at all. I am absolutely clear about it. We can't really ride on the financial sector buoyancy to build up the GDP, which will come down crashing if the real sector is not going to support us at all. So when we talk about globalization, globalization is not just about finance. Globalization is about the countries of the world getting intertwined in terms of economic resources, financial resources, technology resources, health issues, climate change issues. I think all these are important. We can't really be looking at just the globalization of the finance. So when we talked about globalization, we are talking about free trade. We are talking about within the finance, we are talking about free trade, free remittances, reasonably free capital flows. This globalization process has never been a linear process. First of all, let me stress that it's not a one-off affair. It's a process. It lasts over a longish period of time, and there are hiccups. We did face a big hiccup in 2001 at the time of World Trade Center, New York accident. Subsequently, at the time of global financial crisis, European debt crisis. All this actually created some kind of a dent on globalization. When we say dent on globalization, the freer trades, the freer capital flows, the freer information flows, they were all actually impeded to some extent because of these incidents. Today, we have now stepped back and we are talking about a deglobalizing world. I am not in agreement with that, but of course, the organizers have given me this topic, so I need to talk on that. I continue to believe globalization is a process which has begun quite some time back, almost about 3.5 decades back. We are firmly into it. To step back and reverse the direction is going to be well nigh impossible. I am repeating it, it's absolutely impossible. We are living in a completely interdependent world. We are linked to each other. And if we say that we are deglobalizing today, I would consider that as a blip. I would consider that as a market where the market is going up, there is a blip, it comes down, it consolidates, again it starts going up, again it comes down, again it goes up. But if you look at the secular trend, the trend is one of an upward movement. Similarly here, I would treat globalization is something where we have we have got into a path where we are learning to live, used to live in an interlinked world where we cannot really step back at all. So the two events which are making us think back on this clearly are COVID and the Russia-Ukraine war. COVID, not man-made, maybe people say it's Chinese-made, and the Russia-Ukraine war, which is clearly man-made. Now, these two events have created some kinds of dents, blips in the globalization process. Again, I think Anand said something which is very good. He quoted somebody, I just noted down. We overestimate outcomes in the short term, underestimate outcomes in the long term. So my feeling is that when we say we are deglobalizing, we are looking at the shortest possible term starting from March 2020 when COVID actually took roots. Subsequently, in 2021-22, it intensified, and then Russia-Ukraine war started. And we now believe that we have taken a firm, decisive turn from globalization. I don't really agree with that at all, as I mentioned before. For we can't be living in a fragmented world. But let's just assume that we are going to be living in a fragmented world, even for a short time, say for the next about 5 years or so. What could be the policy implications for this? I'm not going to get into the global policy implications. I'm going to leave a lot of space for Anirudh to talk during the panel discussion. I'm going to confine my thoughts on 2 or 3 issues as far as India is concerned. How are the policies going to be reshaped as far as India is concerned in this kind of a fragmented world? What will happen to the capital flows? Now, can we really say that we are going to live in a fragmented world, that we are deglobalized, we don't need the capital flows at all? The scary thing today is that the current account deficit of the country has been going up. Estimates point out that this year we could have a current account deficit in excess of $100 billion. It could touch about $120 billion. How is it going to get financed at all? That's going to be a moot question if the globalization process is going to be there for a firm reversal. Clearly, I think RBI has taken cognizance of that, and RBI has been taking firm steps towards that. And in July this year, as people pointed out earlier, we talked about a rupee trade settlement. Now, I'm going to be a little self-critical about this, as I normally do, being from RBI, having spent about 3.5 decades there. I'm going to be quite critical about this. Is it going to be a problem solver for us? Is it going to be a long-term problem solver for us, rupee trade settlement? In my view, no. Why? Let me just put out my arguments. We are saying, number one, we should encourage more countries to come into opening rupee accounts. The foreign banks will come and keep rupee accounts with us, and our exports and imports will actually be done in rupee, and then it will get settled in rupee. Take Russia, for example. Russia has come into this, more willingly. And there are other countries which will come into this a little more willingly, not because of any intrinsic beauty of this particular model. It is because they have their incapacity, they have the reasons. Russia cannot trade in dollars today. Sri Lanka has its own problems. Iran has been having traditional problems. So perhaps some of these countries may get into this. Now, when they come into this rupee trade settlement mechanism, and the situation with Indian-Russia trade today, Anand pointed out about China, Russia is not that horrific, but then with Russia we clearly run in excess of about $10 billion trade deficit. So, if you open a rupee account, rupees will get accumulated in the Russian bank's account. Good, fine, story here is good. What will the Russians do with this rupee? What will the Russian banks do with this rupee? They can again set it off against their own imports. But then that we already talked about the story, there's going to be a net surplus of rupees lying in the foreign bank's account. Next, they can consider investment in the Indian market. Either it could be a direct investment or it could be a financial investment. I'm not sure whether that much of opportunities are available in India, and whether the Russian exporters or the Russia as a government will be willing to invest everything here in India. So clearly, this surplus which is going to be there, assume that, on a very optimistic basis, about 50% of this surplus is going to be invested in direct investment or the portfolio investment. What do you do with the rest of the 50%? Now, how is it going to be repatriated? Are you going to repatriate it back into Russia? The Russian banks actually take it back into the country, and the Russian government maintains a rupee account. Or you take an Indian example. Let's assume India were to be in a surplus position with Russia, and Indian banks get all the rubles. What do we do with these rubles at all? Ultimately, these rubles will have to be bought up by the Reserve Bank of India as a part of the foreign exchange reserves. So what is going to happen willy-nilly is that the Indian foreign exchange reserves are going to get diversified out of dollars into those currencies with which India runs a trade surplus. Unfortunately, India does not run a trade surplus with a large number of countries. So we can actually market these schemes with those countries with whom we are running a trade surplus, but unfortunately we don't have. So those countries which are running a trade deficit will be willing takers for this, but ultimately there is no logical end to this at all. There is another concomitant issue that you are going to face in the markets. If such bilateral trade blocks come into operation, which we are talking about as a deglobalization process, as an unintended outcome of the deglobalization process, Russian ruble's value in terms of rupee has to be found. Today, Russian ruble's value in terms of rupee is done through an intermediate route of dollar. Assuming that the dollar market is going to dry up completely, the value discovery for the currency is going to become even more difficult, because the Russian ruble dollar market has at least some traction. But when Russian ruble is going to trade against rupee, Indian rupee, Pakistani rupee, Sri Lankan rupee and all, the entire thing gets segmented into much, much smaller components, with the result that the price discovery in these markets is going to become well nigh impossible, and the entire valuation mechanism that we are talking about is going to land all the countries into a lot of legal wrangles and problems, which we entered into, mind you, when we had the Russian ruble trade. We had a huge problems determining the value of Russian ruble in terms of rupee, which created a huge problem in those days also. Now, this is one issue that I would like to highlight and leave it at that for the panel to take it up a little further. Ultimately, this issue could be solved if rupee becomes convertible on the capital account or ruble becomes convertible on the capital account. I'm not sure how long this process is going to be. Whether India is keen about rupee being made completely convertible on the capital account, I'm not too sure about it at all. There are lots and lots of macroeconomic problems that are on the way. Unless those are going to be taken out of the way, rupee convertibility will still remain as a distant dream. Deputy Governor Ravi Shankar, when he talked about internationalization of rupee very recently, he brought out other factors apart from the factors that the Tarapur committee highlighted. Tarapur committee had highlighted the fiscal deficit issue, the inflation issue, exchange rate stability issue. Deputy Governor Ravi Shankar talked about the military might of the country, a very real factor which we do not factor in our economic discussions. If a country has to have a convertible currency, the military might is going to really be a very important factor. So I don't know how to factor this in. I don't know how we are going to have a guesswork on this for ensuring that rupee is going to become convertible a little too soon, so that the rupee trade settlement itself will have a logical end in people trying to hold rupee as a reserve currency. Offshore and onshore rupee, yes, that's going to be another problem where the policy makers are going to face a huge amount of issue. Today, with the offshore and onshore having a common position, we did very recently see how the Reserve Bank was up against a huge amount of issue in managing the rupee. So this is something which has to be thought through. I don't have a real solution for this. If you looked at Usha Thorat committee report, the Usha Thorat committee report did not talk about intermingling of positions at all. It talked about absolutely separate positions being maintained, separate books being maintained. So this is an unsolved issue. This could take a policy, this need a huge amount of policy thought if the deglobalization effort is going to take place. One more issue that I would like to highlight is that what would RBI intervention do when deglobalization takes place. In general, there is a perception that RBI jumps into the fray if the rupee depreciates, and then it would like to prevent rupee depreciation. I won't say it is completely correct. There is a slant towards it, I would say, particularly in times when there is a vertical fall of the rupee, so that the perceptions are not affected in a very big way amongst the industry people. So RBI steps into the job. But the way RBI spent money in the recent episode is something which was scary. The foreign exchange reserves going all the way down to 520 billion from a high of about 642 billion in a matter of just about a year is something which we thought if it could last for another about 1 or 2 years, perhaps we would face a horrible situation of the foreign exchange reserves. This is where I feel maybe RBI as a policy call will have to be very calibrated in its intervention efforts when it comes to deglobalization process. It cannot be spending money, spending dollars in a way that the dollar is going to get depleted in an accelerated pace, which means we need to develop some amount of tolerance for rupee depreciation. And by allowing the rupee to depreciate, if you look at even the statistics from what the RBI bulletin publishes, clearly, I would say, don't look at just the past year for the purpose of real effective exchange rate. If you look at the longer horizon, rupee still continues to remain overvalued on a longer horizon. If we just keep shifting the base and start deriving comfort from that, I think we are deriving a foolhardy comfort, which is not really good for us. Last point that I would make is about the bond markets in a deglobalized scenario. All of us are aware the Indian government is now borrowing more than about 15 lakh crores a year. Yes, the institutional investors are there in a big way. The primary dealers are doing a wonderful job trying to market this borrowing. But can it be done without the FPIs coming into the country at all? Can we completely close the gate for the FPIs, thinking that the deglobalization process is something which is going to completely stop the FPIs from investing in the rupee debt, or we should stop them? This is clearly not a solution at all. It's going to put a big hole as far as the government's borrowing program is concerned. Who is going to step into this hole? Can the retail investors come in? Well, I doubt. Whatever may be the kind of program that the policy makers can introduce, the retail investors cannot step into the foreign investors as far as the government securities are concerned. So this is something where actually we need to really think through again. We have to link it up with the trade settlement issue. And if the trade settlement issue is going to provide avenues for the excess rupees accumulated to be invested in the Indian government securities, do we have tolerance for it? A lot of foreign banks coming and investing the rupee in the Indian rupee security market and then willing to take it away in times of turmoil. Do we have the gumption to live with it? Do we have the guts to live with it? This is something which a question that we need to ask before we can actually solve this entire issue. Let me close it saying that I started the address talking about globalization spanning across finance. I ended up talking only about finance. But let me close saying that unless this issue is correlated with several other issues of climate change, technology sharing, information sharing, when we talk about globalization, can we stop the internet and live with it for about 1 hour? Impossible. We just can't live at all. We can't stop looking at the WhatsApp. If WhatsApp were not to be there, I think most of us would go mad and the hospitals will be full today. So given that kind of a situation, I think globalization is a topic which spans well beyond finance. Thank you very much for a very patient listening.